All right. On this
It
episode of
is.
Real Estate Chat, Robert,
Yes.
did you know that 2/3 of mortgage borrowers in Canada said they are having trouble meeting their financial commitments, according to June 13 report by the Financial Consumer Agency of Canada? So when 66% are having trouble making their mortgage commitments happen, what happens to the real estate market? That's what we're going to be talking about on Real Estate Chat with
Robert Eid.
and John De Perez. Let's jump right into the article that Robert shared with me today. And this is the title of it is Mortgage Lenders Brace for a Challenge When Borrowers Face Renewal Crunch. So for those of you who have not noticed that the interest rates have not been low for a very long time anymore, they've been quite high. They've been increased. We're sitting at about 5%. Mortgage rates have gone up. Variable rates have gone up. Fixed rates have gone up. Everything has pretty much gone up. And so this survey, I guess it was a survey, a report that was done, expressed or discovered that 2/3 of Canadians are going to be having problems, especially as the renewals come. And Robert, how do these renewals work and when do they come due?
Okay, everybody has a renewal. All mortgages in Canada can only be 5 years locked in, and then they come open for renewal. So depending on what you decided 1 year ago, 2 years ago, 5 years ago, on a fixed term, or whether you decided you get a variable rate mortgage, one of these days you have to renew at a new rate. If you took a variable rate, it was for a period of time, and they said that they were going to keep your payment consistent regardless of the interest rate, and they would extend the amortization. Or they said if interest rate went up before this renewal date, then they will increase your payments. And there's been lots of monkey business in the federally regulated market on this kind of special dispensation to people on renewals. And how they say yes to this one and no to that one is another question, but it's got definite underwriting guidelines of how much equity do they have in the property? How saleable is the property? How's their payments been? What's their job history? How many people are bringing in money? All kinds of things. Now, the article at hand was about credit unions, and credit unions are provincially regulated. And because they're provincially regulated, they were exempt from the stress test that was causing everybody such heartache for a few years. Now, the stress test was intended to protect the lender so that they would not lend money at ridiculously low, historic low rate lockdown interest rates to people who are unqualified, but just barely able to make it at the super low rate. They had to qualify at 2% more so that if rates went above the super low, impossible to maintain low rate, that they would have a little cushion, that they would have been pre-qualified at a higher rate, even though they still would be getting the low rate. So a long answer, but some people are on variable rates, but that has a period of time associated with before the whole kit and caboodle has to be renegotiated. Others are on fixed terms. Some are provincially regulated, which is what we're talking about in this article about credit unions, and others are federally regulated, just like Royal Bank. Most lenders are federally regulated under the Office of the Superintendent of Financial Institutions, who is currently reviewing his regulations of what he's going to do. Should the stress test change? Should the qualification of down payment? Should the all kinds of things is under review right now. They're going to come up with new harsher rules very soon. Anyway, so what happens on renewal? If you're qualified, nothing special, except your payments probably are higher than they were if you got a low rate mortgage. What happens if you're not qualified because the job you had then you don't have anymore, or any one of 1,000 things that the math just doesn't work out anymore? Most lenders are willing to work with you. Most people who have, if they've only got 2% equity, they're going to be hard pressed, but they don't want the property back. They want to make sure that you can stay in there and you can afford it. And if you have to get another job, well, you'll have to. But they don't want to not renew the mortgage because they know you'll go somewhere else, and you'll go somewhere else with a higher rate of interest, and the payments are higher and it's going to fail. So they're not ogres, but they're not gentlemen either.
So when these renewals happen, and there's going to be a whole bunch of them coming up, and the Desjardins group, they pretty much have a bulk of these coming up that they say is going to be for renewal. So when that happens, around 10 to 15% of Desjardins members could be under stress, he said, and that's coming on in the next couple of years with these fixed rate mortgages, would we start to see them, let's say, for example, they can't make the renewals happen. Will the supply part of the real estate market equation start to swell up because of homeowners who decide, hey, you know what, why don't we just sell it because we can't make these payments anymore?
That's absolutely right. We had predicted that this was going to happen with investors in the early part of this year. It didn't happen, but we had predicted that investors would say, okay, my property that I've invested in is not going up anymore. I'm going to get rid of the tenant. I'm going to put it up for sale and I'm going to cash out. And if I make a profit, I make a profit. If I make a loss, well, it's a capital loss and I can write that off against other investment income. And there would be a bunch of them, but there wasn't. And there wasn't a bunch of people who own their own home who were going through a renewal or whatever. They just said, well, I'm going to stick here instead of trying something new. And so there wasn't, but there could be, if someone knows that in 3 months the renewal is coming up and they can't make it, and that the existing lender is not offering them anything that they can work with, and any other lender is offering them something worse, then they'll say, okay, let's sell it now, and we'll have the closing coincide with a few days of when the renewal is. And if it's a little bit later, well, let them come and get us, because things don't work that fast. And yeah, there'll be some desperate sellers if things get higher and higher interest rates.
Well, there you go. I mean, when fixed rates come up for renewal, and for example, your rate was at the very low rate, and now all of a sudden 5 years is up, which is 2024, perhaps into 2025, and you have a shock now of what your payments will be. This is exactly what Robert's talking about, is that the bank doesn't want to be in the I own your house business. They just want their mortgage payments. And if the homeowner cannot make it, inventory starts to swell up, and supply demand, if there's still a lot of demand carrying the market through, prices will remain stable. If not, prices could dip, Robert.
Well, of course, there's supply demand, just like you say. And if the overall consumer confidence is that the poo is hitting the propeller, then there will be more and more people dumping. Don't want to catch a falling knife is the try and catch a falling knife is the expression. And but we seem to be feeling that everybody's telling the Federal Reserve and the Bank of Canada, hey, you should be changing your policy. You're killing us. And not interest rates continue to go up, even though they would like to, because, like, as we said last time, they're looking at 6-month-old data to try and make decisions about what they're going to do 18 months from now. And it's
well, make sure you watch our previous episode and one previous before that where we talk about interest rates. Make sure you like and subscribe. And we're going to continue our discussion in our next episode with Robert's July forecast. And we're going to answer a real estate chatter's question. When will the market finally bottom out? In our
I want to know that. I want to know that.
I want to know that too, Robert. So stay tuned for that in our next episode of Real Estate Chat. Take care and bye for now.